Yo, 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 welcome to the wild, wacky world of Forex, where currencies duke it out 24/5 and you, my friend, can get in on the action. Think of it like trading sneakers, but instead of Yeezys, you're dealing with euros, dollars, yen, the whole global currency gang. Now, you ain't gonna see physical cash flying around here. We talking digital dough, baby. And the way this whole thing works is through currency pairs. Think of it like a dance-off, but instead of fancy footwork, it's all about the exchange rates. You're basically betting on whether one currency will rise or fall against another. So, strap in, grab your metaphorical trading hats, and let's break down these currency pairs, shall we? First up, we got the major pairs, the LeBron James of the Forex court. These are the big dogs, the heavy hitters, the ones everyone's watching. Why? Because they involve the most traded currencies in the world, representing the big boy economies, the US of A, the Eurozone, Japan, the UK. Think EUR-USD, the euro versus the dollar like a transatlantic tug of war, or USD-JPY, the dollar going head-to-head with the yen, a real East meets West showdown. These pairs are super liquid, meaning there are always buyers and sellers like a 24/7 flea market, but for money. This makes them easier to trade, with tighter spreads, the difference between buying and selling prices. So if you're just starting out, the majors are a good place to dip your toes in the Forex pool. Now, let's talk about the minor pairs, the indie bands of the Forex world. They're not as popular as the majors, but they got their own unique vibe, their own dedicated fan base. These pairs usually involve one major currency, like the US dollar paired up with the currency of a smaller but still significant economy. Think GBP CAD, the British pound doing a little dance with the Canadian dollar, or AUD NZD, the Aussie dollar hanging out with its Kiwi cousin. While minors might not be as liquid as the majors, they can offer more volatility, which means more potential for profit. And yeah, more risk too. It's like investing in that indie band before they hit it big. You never know, they might just become the next big thing. Finally, we got the exotic pairs, the durian fruit of the Forex market. These are the pairs that can make you a fortune or leave you in tears. Now some folks, they smell the durian and they run for the hills. They can't stand the risk, the volatility, the unpredictability. Others, they can't get enough of that pungent aroma. They thrive on the excitement, the challenge, the potential for big gains. Exotic pairs, they're kind of the same. They offer a unique flavor to your trading portfolio. These pairs usually involve a major currency paired with the currency of a developing or emerging economy. They bring diversity and a different kind of thrill. Think USD ZAR, the US dollar tangling with the South African rand. It's a dance of economic forces. Or EUR-TRY, the euro doing a little tango with the Turkish lira. Each pair tells a story of its own. Now exotics, they're the riskiest of the bunch. They're like that roller coaster at the amusement park. You might throw up, but you're gonna have one heck of a ride. The highs are high, and the lows can be devastating. They're less liquid, more volatile, and can be influenced by political instability or economic uncertainty. One moment you're up, the next you're down. They're subject to sudden changes due to political events, economic shifts, or even natural disasters. It's a wild ride, but for some, that's the appeal. But hey, high risk, high reward, right? The potential for significant returns is what draws many traders to these pairs. Just make sure you know what you're getting yourself into. Do your research, understand the risks, and be prepared for anything. The world of exotic currency trading is not for the faint-hearted, but for those who dare. It can be incredibly rewarding. Section 5. Why should you care about these pairs anyway? Alright, so we've met the gang majors, minors, exotics. These are the key players in the Forex market, each with its own unique characteristics. But why should you care? Why should these pairs matter to you as a trader or investor? Why not just throw darts at a currency board and hope for the best? It might seem like a fun idea, but it's not a strategy you want to rely on. Well, my friend, understanding these pairs is like knowing the players in a basketball game. You wouldn't bet on a game without knowing the teams, right? You gotta know their strengths, their weaknesses, their tendencies, if you want to make smart bets. Each currency pair behaves differently under various market conditions. Each pair has its own personality, its own story to tell. Some are more volatile, while others are more stable. The EUR-USD, for example, is influenced by interest rate differentials between the US and the Eurozone. This pair is one of the most traded and has a lot of liquidity. The GBP-JPY can be affected by Brexit drama and Japanese economic policies. This pair is known for its volatility and can offer significant trading opportunities. By understanding these factors, you can start to make educated guesses about which way a pair might move. It's not just about luck, it's about informed decision-making. It's like being a currency detective, piecing together clues to solve the Forex puzzle. The more you know, the better your chances of success in the market. Section 6. Major pairs in action EUR-USD, the classic love-hate relationship. Let's get down to brass tacks and look at some examples. First up, the EUR-USD, the Beyoncé and Jay-Z of the Forex world. They're the power couple, always in the spotlight. Their every move scrutinized by the paparazzi, red traders. This pair is driven by a whole bunch of factors: interest rates, economic growth, political stability, you name it. When the US economy is booming, the dollar usually strengthens and the EUR-USD goes down. When the Eurozone is looking fly, the euro gets a boost and the pair goes up. It's a constant push and pull, a delicate dance between two economic giants. And you, my friend, can profit from their every move. Section 7. GBP-JPY when the pound met the yen, a tale of two economies. Next up, we got GBP-JPY, the pound and the yen, a real tale of two economies. The pound, representing the UK, is known for its stability and resilience. The yen, representing Japan, is like that quiet kid in class who everyone underestimates until they ace the test. This pair is influenced by things like Brexit negotiations, Bank of England monetary policy, and the Japanese government's economic policies. When the UK economy is doing well, the pound usually rises, taking the GBP-JPY with it. When Japan's economy is firing on all cylinders, the yen strengthens and the pair goes down. It's a fascinating dynamic, watching these two currencies duke it out in the Forex ring. Section 8. Minor pairs, sneak peek. CAD-CHF, the polite pair. Now let's take a peek at the minors, starting with CAD-CHF, the Canadian dollar, and the Swiss franc. This pair might not be the most exciting, but it has its own unique charm. This pair is known for being, well, a little bit boring. It doesn't have the wild swings of some other pairs, but that can be a good thing for certain trading strategies. They're like that polite couple who always brings a casserole to the party. Reliable, steady, and always there when you need them. But don't let their low-key vibe fool you. Just because they aren't flashy doesn't mean they aren't worth your attention. The CAD-CHF can still offer trading opportunities, especially if you know what to look for. It's all about understanding the subtle movements and being patient. The Canadian dollar is influenced by commodity prices, as Canada is a major exporter of oil and lumber. When these commodities do well, the CAD tends to strengthen. The Swiss franc, on the other hand, is considered a safe haven currency, meaning it tends to strengthen during times of global uncertainty. Investors flock to it when they're feeling nervous about the global economy. So, when the world is freaking out, the Swiss franc puts on its superhero cape, and the CAD-CHF usually goes down. But when things are calm, the pair can offer steady, predictable movements. For traders who prefer a more measured approach, the CAD-CHF can be a great pair to watch. It's all about finding the right moments to enter and exit the market. So keep an eye on this polite pair. They might not be the life of the party, but they can still bring something valuable to your trading strategy. Section 9. Exotic pairs, a glimpse into the unknown, USD-MXN, the spicy salsa dance. Finally, let's take a quick trip to the exotic side with USD-MXN, the US dollar paired with the Mexican peso. This pair is known for its volatility, like a spicy salsa dance. One minute you're gliding smoothly, the next minute you're sweating and trying to keep up. The USD-MXN is influenced by a whole range of factors, including US-Mexico trade relations, Mexican interest rates, and political developments in both countries. When tensions rise between the US and Mexico, the peso usually takes a hit and the USD-MXN goes up. When the Mexican economy is doing well, the peso strengthens and the pair goes down. It's a wild ride, but hey, that's what makes Forex so exciting, right? Section 10. So, you want to be a Forex guru? Understanding pairs is your first lesson. So, there you have it, a crash course on Forex currency pairs. We've covered the majors, the minors, and the exotics, and we've seen how each pair has its own unique personality and drivers. Understanding these pairs is crucial if you want to be successful in the Forex market. It's like learning the alphabet before you can write a novel. Once you understand how these pairs work, you can start to develop your own trading strategies and make informed decisions about when to buy, when to sell, and when to sit on your hands and grab another slice of pizza. Section 11. Remember, Forex ain't a get-rich-quick scheme. Be smart, be patient, be cool. But before you quit your day job and start calling yourself the Wolf of Wall Street, remember this. Forex ain't a get-rich-quick scheme. It's a marathon, not a sprint. You gotta be patient, you gotta be disciplined, and you gotta be ready to lose some money along the way. But if you do your homework, manage your risk, and keep your cool, you might just find yourself on the winning side of the trade. So go forth, my Forex Padawans, and may the pips be with you.